Some activity midweek in gold with the metal falling to the 1100 level. The metal managed to stay above that level, but how is it set up to close the week? Joining us is the technical analyst, Gary Wagner. Thanks so much for being with us.
Great to be here. Great to be here as always.
So gold trading sideways ahead of next week's FOMC meeting, but the metal manages to see some volatile movements on thin trading. What did you make of gold's price action this week, Gary?
Well, it was quite interesting. Realize that we have seen gold really rally from about 1071 up to about 1171. So we got that $100 move, which is typical in a good rally in gold. From there, we saw a correction. Now, the key level to this correction has been 1105 to 1109, because roughly in that band is a 61% retracement of the rally. So as long as we're trading above, call it 1108, 1109, we have an opportunity to see a bounce to the upside again. However, if it breaks below that particular area, meaning 1109, it's probably going to run to about 1095. But as of right now, it seems to have found some support.
Well, I want to pull up one of the charts you brought to us today, Gary, to see to look at the levels you are looking at for gold right now. So key resistance?
Well, key resistance is going to be in a couple of places. 1121 is a key level, and then above that is around 1152. Those are key levels of resistance currently.
And looking at another chart, you also note that something interesting is happening with gold in terms of moving averages.
Yes, many of us traders follow a 50-day moving average, and when we see a commodity go below there, we know that there's that potential for more downside pressure. It's entered into a bear stage. Now, what I've got in this chart is two different time cycles, one at 50 days, the other one at 21 days. And what I found interesting of recent is that 21-day moving average, the shorter-term moving average, has actually crossed back above the longer-term moving average. And that's a golden cross in terms of a technical term, and it could be really conveying that we found some support in gold.
Well, Gary, let's talk about the big news next week, the FOMC. Looking at historical charts, are there any clues as to where the metal may be headed next week as the monetary policy meeting takes place?
I wish I could tell you yes. No one knows what the Fed will do. And we've always been proponents of saying it's not a matter of if they're going to pull the trigger and we're going to get so-called liftoff. It's when they will begin to initiate rate hikes. Secondly, and I believe more importantly than when they begin, is the pace in which they start bumping up interest rates. If they're going a quarter point at a time and extending that, to a 3-4 month period, so we have a very, very gradual move back up, it's one thing. And I think that the Fed is almost backed themselves into a corner where it's difficult for them to raise interest rates or to actually begin that, but at the same time, there's some underlying pressure for them to signal that liftoff has begun. So with those two conflicting avenues, it's hard to say which will be the outcome, and really only the people within the Federal Reserve know that.
Gary, thanks so much for your thoughts today. And thank you for watching this edition of Kitco's Chart This. We'll see you next week.